Let's do business now. And UK-based Fitch Solutions is anticipating that Ghana will reach an agreement with its bilateral creditors in early 2024. It is also projecting that a deal with commercial creditors will be reached by mid-2024. This, it believes, will improve investor sentiment towards Ghanaian assets, improve capital inflows, and provide support to the city. Here is more in this report.
In its country risk report on Ghana, it said the government will make progress regarding the restructuring of Ghana's external debt under the G20 Common Framework in the coming quarters. Indeed, we expect that the authorities will make progress regarding the restructuring of Ghana's external debt under the G20 Common Framework in the coming quarters. The UK-based firm said its current projections are predicated on the assumption that the Ghanaian authorities and external creditors will be able to finalize debt restructuring negotiations by mid-2024. Should this process take longer than currently anticipated, Fitch Solutions said investor confidence towards Ghanaian assets would weaken. Thus, its stress would result in a renewed sell-off of the cedi, which would lead to stronger imported price pressures. In this scenario, domestic demand would remain weaker than our baseline forecast assumes, it's added.
The country recorded some marginal decline in earnings from exports in the third quarter of this year. Data from the Bank of Ghana puts the amount secured during that period at $3.7 billion. George Wefi has the rest of the story.
That the country got from July to September this year represents about a 10% decline compared to the over $4,000 it got for the same period last year. The development can be linked to declining prices of crude oil on the international market and the marginal decline in the volumes of gold exported by the country during that period. This is despite the fact that prices of gold on the international market was going up during the third quarter of this year. If the trend is sustained to the end of this year, that could impact negatively on the country's foreign exchange earnings going forward. But despite this challenge, the country ended the third quarter of this year with a trade surplus of $174 million. This is due to the fact that the amount of money that Ghana spent on exports went down by some 11.5% to reach $3.5 billion. However, some are worried that not all these earnings still find their way into Bank of Ghana's coffers, a move that could have gone a long way to improve the central bank's earnings to support the local currency.
We'll take a quick break here. We'll be back with showbiz. Do stay.